Hello, today we are going to solve Jan 2024 paper, part 3 of question number 1, statement of financial position at 31st December 2023. So we have to prepare that. So we had earlier prepared manufacturing account, okay, so which involved the cost of production, and then from there we prepared profit or loss and other comprehensive income for the year and calculated the profit of the year to be around 43,600. Now today we are going to calculate statement of financial position at 31st December 2023. So let's calculate. Okay, so the first one is going to be the non-current assets. Okay, so let's write all the non-current asset values. So the non-current assets are going to be, so there are three non-current assets. Okay, office premises, machinery and fixtures and fittings. So let's write that. So these are the three non-current assets. Now, so the first one is going to be the cost. Okay, cost for all of them, and then the cost for all of them. Okay, it is going to be 185. So these is the cost remains the same. So let's put the cost for this thing. Okay, for all of the three. Then you have depreciation cost. Okay, for this accumulated depreciation. So let's write the accumulated depreciation. So the accumulated depreciation expenses. Okay, so we will have to add to this 65,000 plus. Okay, what was the accumulated depreciation for the office premises? The office premises was extra 2,500. Okay, that was this year's depreciation. So that is going to be equal to, so 66,500. Okay, 66,500 plus 2,500, that is equal to 69,000. So 69,000. Okay, and then you have machinery. Machinery is going to be 34,000, and this year's depreciation was calculated for 17,000. So let's add up that depreciation. So that is equal to, so the total accumulated depreciation becomes 34,000 plus 17,000, that is 51,000. And then you have fixtures and fittings. Okay, for the fixtures and fittings, it was calculated, this year's depreciation was around 3,600. So that is equal to, so 25,200 plus 3,600, that is 28,800. So the total accumulated depreciation after including this year's depreciation. Okay, so you had calculated this year's depreciation and the previous one, so you just have to add to the existing accumulated depreciation and you will get the values. Okay, so the first one was office premises. Okay, so cost minus accumulated depreciation. Okay, we have to do to calculate the carrying value. Then you have 51,000. Okay, then you have 28,800, which is the accumulated depreciation for fixtures and fittings. So now let's calculate the carrying value. Okay, the carrying value is going to be so 125,000 minus 125,000 minus 69,000, that's going to be 56,000. So that's the carrying value for the office premises. So likewise you calculate 85,000 minus 51,000, that will be around 34,000, and then you have 36,000 minus 28,800, it will be around 7,200. Okay, so these are the carrying value of the assets. Now let's add up the total, okay, of all of the carrying value. So when I add up 56,000 plus 34,000 plus 7,200, it should be around 97,200. Okay, that's the carrying value of the assets. You can add up also the total cost. Okay, the total cost of all of them, 125,000 plus 85,000 plus 36,000, this will be around 246,000. Okay, you add the total and keep, and total accumulated depreciation also you can calculate. So 69,000 plus 51,000 plus 28,800, it's going to be around 148,800. So even when you do 246,000 minus 148,800, it should give you around 97,200. Now let's calculate the current assets. So let's calculate the current assets. So first one is the inventory. Okay, the closing inventory, which was around 5,000. Closing inventory of raw materials or the plastic waste here. Okay, it is the closing inventory of raw materials, which is the plastic waste. Okay, so that is going to be around 5,000. And then you have closing inventory of the finished goods. That's going to be around 7,500. Then you have, okay, there was no work in progress. Next, you have the trade receivables, 33,850. Okay, so then you have and then you have less irrecoverable debts. Okay, so you have to reduce irrecoverable allowance for a provision for irrecoverable debts. So that is So that is 1500. So now, okay, this minus this, and then you have other receivables. So which was prepaid. The prepaid expense had become other receivables. Okay. So that's around 1300. And then you have cash and bank. And then you have cash and bank. So to be around 6150. Now let's calculate the let's calculate all of this. Okay, so what is the net current assets? Okay, it is going to be equal to 52,300.